So Irene and Lydia, welcome.
Thank you.
I think we almost finishing up on this controlling. We had stopped at the application of internal controls or specific applications of internal controls. We cleared anything to do with internal audit function in our previous class. That is what we covered. So we are under application of internal controls. And I said you go through those application of internal controls as I go through to check the sum of the corrections which we are required or which you can make. The first application is controls over purchases and trade creditors. We need to know which are the controls put in place regarding purchases, or whenever they are purchasing or the company is purchasing, and with regard to any supplies or suppliers of the company. So the first thing you should know is what are the objectives behind having controls with regard to purchasing and trade creditors. What is the objective? One of the objectives is to ensure that the duties relating to suppliers or the purchases, they are segregated. Remember, segregation is one of the internal controls, or an example of an internal control. As he said, and we said, one person should not be in charge of a transaction from start to finish. And that is why he said you need to have subdivision of duties, which is segregation. So we always have controls relating to purchasing, so that to ensure that duties relating to purchases are segregated. Number two is to prevent and detect fictitious or dummy purchases. So we are putting controls to ensure that if there is any dummy purchases or fictitious purchase is detected, and also we put controls to prevent such dummy purchases. Another one is to ensure that purchases of goods are authorized. We ensure that there is no purchasing without proper authorization. Remember, authorization and approval is again an internal control, as we covered, I think, in our previous class. Again, is to ensure that goods and also any goods purchased are inspected for quality and quantity. We put controls to ensure that you're receiving the right quantity and quality, so that whenever goods are there or they are received after we purchase, they are properly inspected. Also to ensure that payments of purchases, they are authorized and approved, because after we purchase on credits, we need to pay, and payment needs approval, and also we need to make sure there is also proper authorization of any payment. And then also to ensure that credits or the creditors, they are paid their dues on due dates, or creditors, they are paid their amount owing on due date, so that you don't delay payment to creditors. So those are some of the objectives behind purchasing and trade creditors. Then you need to remember the purchasing cycle. Those who have done financial management, you must have done the purchasing cycle, where you said when you are purchasing, the first thing is that that department which needs some commodities or some of the items, it needs to have the requisition, then an order is placed. So Specific control procedures, we have number A, the control procedures relating to ordering of goods. Which controls are commonly put in relation to when a company is making orders or whenever we are ordering for some commodities? Number one is that there should be a separate purchasing department responsible for placing orders. We need to have a department which is responsible for ordering, identifying the requirements, receiving requisition from the stores departments, etc. So let's have a department responsible for placing orders, identifying whatever a department requires, receiving those requisitions also from the stores department. It is very important to have such a department or the procurement department in charge of that. Number two, all orders, they should be made by the use of local purchase order. All orders we are making, they should be through an LPO, an authorized local purchase order. That one, I know most of you are working. You know what is an LPO and what is contained in an LPO. And again, another control is that all LPOs should be pre-numbered or they should be serially pre-numbered. They need to have unique identification codes or numbers which are there. So they need to be pre-numbered. Any unused LPO should be kept in a safe or lockable drawer. Let's keep the unused LPO safe. That is a control in an organization. And another one is that LPOs, they should be raised against the requisition notes. LPOs, they are raised based on whatever is requisitioned. So that at least we purchase as per the requisition, and then what is in the requisition is transferred to the LPO. So that is why they should be raised against the requisition notes. Now, after we have ordered, we receive the items we have ordered. That's why you have controls whenever we receive goods or during receipt of goods. One of the controls is that when we receive goods, we should inspect them for quality and quantity. It is there. Goods received, there is an error that is written GODDS, should be goods. Goods received should be inspected for quality and quantity. So that is one of the objectives, and it is here. We need to inspect them whenever we receive. It's a control regarding receipt of goods. And again, inspection of those goods should be done by an independent person, and that person should not have been involved in the ordering. The person inspecting the goods should not be the one who made the order. That is why it is important to have segregation of duties. We want to discourage frauds here. Another one is that goods received should be recorded in what we call the GRN, the goods received note. Whenever we receive goods, let's have them recorded in the GRN or in the goods received note. Another thing is that all the GRNs should have unique numbers, or they should be pre-numbered. It's another control. All GRNs should be pre-numbered. Again, all purchases returned should be accounted for and authorized. If you have returned some items, we need them to be properly accounted for in our books, that their returns outwards. Another one is that the stock should be updated immediately after you receive some items. Any item we receive, let's update our stock. We have controls during accounting for the purchases. We need to know how do we account for the items we have purchased. Controls with regard to accounting for the goods purchased. One, all goods purchased should be recorded in an invoice, and the invoice should be checked for arithmetic accuracy. Let's have an invoice raised against the goods received or purchased. Again, all invoices, they need to be recorded in the purchases daybook. You need to have them recorded in the purchases daybook. After we record, remember, the purchases are also posted. Purchases should be posted to the relevant ledgers. We need to do posting to the relevant ledgers. We can also obtain the supplier's statement. So supplier statement should also be obtained and reconciled with the ledgers. A supplier can give us a statement so that we confirm whether what is in the statement or in the books of the supplier, it is exactly the reconciling or in agreement with what is in our books as a company. Then now we have the purchases ledger control accounts should be maintained and regularly reconciled with the purchases ledger. Let's have ledger reconciliations, or we reconcile the ledgers or the purchases control ledger control account with the purchases ledgers. So remember, after we buy, we have invoiced, we need to pay, or we have been invoiced, we need to pay the amount. That's why we have controls during payment of outstanding liabilities. And we are saying there should be a policy to reconcile the supplier's statement with the invoices and the ledgers before payment. Kabla tulipe, let's have a reconciliation with the invoices and the statement from the supplier before we make any payment. That's why we said the invoice needs to be checked for accuracy. It's very, very important. Once you have paid, we need to stamp those invoices as they are paid. So that's why number 2, all invoices for payment should be stamped as paid after payment so as to avoid a double payment. Duties of ordering, receiving and payment should be segregated, meaning the person ordering should not be the person making the payments, addressing or receiving the items. Then again, all checks which are used for payment should be signed by at least 2 signatories. Whenever we are paying, the check should be signed. Not only one person should be a signatory, at least 2 signatories. Another control is the duties of writing checks. Signing and issuing should be segregated. The person signing should not be the one who wrote it, should not be the one to give the checks. We need to have segregation of such duties. So those are controls regarding to purchases and trade creditors. If you are asked about give controls relating to purchases and trade creditors, you don't need to categorize at easy is ordering, or easy is receipts, at easy is accounting for purchases. No, you just list them, mixing them. But examiner can ask you controls relating to ordering specifically. So that is why I had to split them or to group them based on the purchasing cycle. Well, we got controls over sales and trade creditors, because if we purchase, we can also sell, or we do sell. As companies, we have sales, and we need to start with the objectives. Why should we have objectives regarding sales and data? One, the reason behind having controls regarding to sales and data is that to ensure accuracy of the sales ledger. Even under purchasing, to ensure accuracy of the purchases ledger. Number 2, to ensure that trade or that the credit sales, they are authorized. to ensure that the credit sales, whenever we are selling on credit, there is proper authorization of credit sales. Also to ensure that sales are made to bonafide, not bonfire, it should be bonafide, B-O-N-F-I-D-E, bonafide data. To ensure that sales are made to bonafide data. Also to ensure that customers' orders are promptly executed, no delay when executing customers' orders. Once customers made an order, it is executed without delay. So that is another reason why we should have controls regarding to sales and debtors to ensure that credit sales, they are properly invoiced. Yeah, we are doing that to ensure that invoicing is done. That's why you should have controls. Also to ensure that bad debts are minimized through fast collection. We minimize the bad debts by ensuring we collect the amounts from debtors without delay or in good time. To ensure that adequate provisions are made for bad and the doubtful debts. Yeah, we normally make provisions that is in accounting for the bad and doubtful debts. So we want to ensure that we don't under-provide or have under-provision for bad and doubtful debts, or we don't have the over-provision. We have properly adequate provision for bad and the doubtful debts. Also to detect dummy sales and debtors or the fictitious sales and debtors. Another one is to detect, prevent. It should be to detect and prevent teaming. Teaming is T-E-E, not T-E-A, T-E-E-M-I-G, M-I-N-G. Teaming and lading. Teaming and lading with respect to debtors, with respect to cash received from debtors. Teaming and lading is a common area which examiner wanapenda kuuliza. So it can be asked to explain what is teaming and lading. So this teaming and lading is a fraud involving the debtors. It occurs that when debtor one pays, if you have debtor one paying, then the cashier misappropriates the amount from debtor one, or he uses that money for his own personal benefits. So when debtor one pays cashier ametumia pesa debtor one, instead of crediting or offsetting the account of debtor one, he uses the amount for his own personal gains or private use. Then if debtor two pays, the amount of debtor two, instead of being used to clear or offset the account of debtor two, it is used to offset the account of debtor one. Kumbuka ya debtor one ilikuliwa, but debtor two akilipa badala ya offset debtor two, it is used to offset debtor one. If debtor three pays, instead of offsetting debtor three account, then he offsets debtor two account. The process continues until one of the debts is written off as a bad debt, or the cashier may decide later to return the money. So that is the teaming and lading. So we want to prevent such from happening. That's why we need controls. So when we make an order, or when a customer makes an order, we need to dispatch. So that is why we have the first stage there. A sales cycle is controls over dispatch, where we are told all dispatch of goods should be authorized. No item should be dispatched, or they should not dispatch without proper authorization. Goods dispatched should be should be recorded in the goods dispatch note. So they need to be recorded in the dispatch note. All goods sent to customers should also be authorized. There need to be proper authorization of those goods which are being sent to customers. Dispatches should be made against the order Remember, customer will make an order, so we are dispatching the commodities or the goods based on the order made by the customer. Unused dispatch notes should be kept in a safe or a locked drawer. And again, all dispatch notes should be pre-numbered. They need to have serial numbers. Then we have controls over the credit sales. We have controls regarding to credit sales. Number one, there should be credit control department, which should do the evaluation of the credit worthiness of the debtors, setting the customer's credit limit, and also authorizing the credit sales. So let's have a credit control department to evaluate the credit worthiness of debtors, setting the customer's credit limit, and also authorizing any credit sale. That is a very important control and controls over credit sales. Another one, customers' credit limit should not be exceeded without authorization. We should sell on credit to a customer based on the limit. We should not exceed the limit unless there is proper authorization from the credit control department. Another one is that customer orders received should be stamped and dated to facilitate execution. If a customer has made an order, let us stamp the order is received so that it can start being executed. All credit sales should be authorized by a responsible person.
Yeah, trash it.
Which is very, very important. Another one is that customer for any credit given. We have controls over invoicing, after I'm through with the sales, I know salaries were taken through by one of you. Hata mimi nimechoka kuzienda through. So controls over invoicing. Invoicing should be done by an independent person. The person doing, the person who should be maybe recording the sales or receiving even money from customers. So number one is that invoicing should be done by an independent person who was not involved in the selling process. Then all invoices should be pre-numbered. All invoices should be pre-numbered. Also, all invoices should be checked for arithmetic accuracy before payment. Let us check the invoices for accuracy before customer pays. Unused invoices, we keep them in safe or in a locked drawers. Customers can also return some items, so we have controls over sales returns or the returns inwards. Number one is that goods returned should be checked for obvious damage. We need to check whether they have been damaged. Another one, goods or returns or the returns inward should be recorded in the goods returned notes. And also the stock record should be adjusted with regard to returns inwards. A credit note should be issued against the goods returned. Remember, credit note is used to correct the overcharge. Then debtors ledger should be credited with the amount of goods returned. Yeah, we need to credit the debtors ledgers with regard to the amount of goods returned. Then we have controls over the debtors. One is that customers' statements should be obtained and reconciled. We need to obtain the customer statements and reconcile with our debtors, with the debtors ledger. Any discount should be authorized and recorded. Discounts should be authorized and recorded. There should be a procedure for identifying slow-paying debtors. You have those debtors who pay slowly. We need to have a way of identifying the slow-paying debtors in order, or we need to identify them in order to follow them up in good time. Also, debtors control account, they need to be maintained and regularly reconciled with the ledgers. I know those ones, you know. Then we have any credits entry in the debtors ledger should be authorized. Not everyone should do the credit entries in the debtors ledgers, because you want to minimize the teaming and lading and the frauds in the company relating to debtors. Cashiers should not be allowed to access and make entries in the books of accounts or in the debtors ledger in order to minimize the teaming and lading. Cut-off procedures should be performed to ensure that debtors are recorded in the correct account and in the correct accounting period. So what are cut-off procedures? The examiner can ask you about cut-off procedures or tests. These are procedures put in place to ensure that a transaction is recorded in the correct account and correct accounting period. So they are the tests we perform to ensure that if it's a transaction relating to Kimani, it is recorded in the Kimani's account and not in the Kamau's account. And also a transaction for 2024, it is not recorded in 2023. It is actually recorded in 2024. Whatever procedure we perform or test we perform with regard to confirming that a transaction is recorded in the correct account and correct accounting period, it is called a cut-off test or cut-off procedures. I know that is a commonly examined part in exam. You are asked such questions. Anyway, controls over cash and checks we receive from debtors. One is that all cash and the checks we received should be recorded in the cash book. Let's have recording in the cash book. Then there should be immediate banking of the cash and the checks received. Tukipata pesa tusikae nazo, let's have them banked, even if it is a check, unless it's a PD check. And the banked checks and cash should be kept in a safe or in a locked drawer. Sometimes, I don't know whether in our country currently, we don't encourage receiving money through the post. So I will not go through cash and check the received through the post, but maybe for some few companies, it could be happening. But currently, I know that one is being phased out. So I won't go to that. I'll go to controls over salaries and wages. And because this is what you guys deal with, I know you deal with the payroll, want to know why should we have salaries and wages, controls regarding to salaries and wages. I think Irene is there. Irene, take us through the control objectives behind over salaries and wages. Irene.
To ensure that the wages and salaries are paid to beneficiaries.
Very true.
To ensure that salaries and wages are properly computed.
Yeah, proper computation of salaries. Usilipe mtu pesa mingi. Another one.
To ensure that payroll deduction are properly computed and remitted.
Yeah, we compute the deductions and we remit them accordingly. Another one.
To ensure the safety of unclaimed wages.
Yeah, maybe we have unclaimed wages. We need to ensure we are keeping the amount safe.
To detect ghost workers or dummy workers.
Yes, to detect the ghosts, some of the dummy workers. Another one.
To ensure that wages are computed using authorized rates.
Yeah, we have authorized rates. So page, naona alikuwa anasema sorry for that. I was reading what you guys were talking. So thank you, Irene, for those control objectives over salaries and wages. We have Irene, the next one is Lydia. Lydia, which are the common risks associated with the payroll? I know these are things you know. Risks associated with the payroll, Lydia.
Unauthorized payments being made to dummy workers.
Yeah,
You can
you
hear
make
what I'm talking today.
uko very clear Leo, unauthorized payments being made to dummy workers.
Erroneous computation of the payroll.
Yeah, there could be errors in the payroll, erroneous computation in the payroll. Another one.
Unauthorized access to the payroll resulting to manipulation of the data.
Yeah, unapata payroll imefunguliwa, unaweza change uweke tu 01. Kama ni Excel inatumika kwa hiyo salary, weke tu 01 upate umepata, kama ulikuwa unapata 20,000 you get 200,000. So that is it. Another one.
Failure to pay employees in the time on time resulting to loss of morale and embezzlement.
Yeah, failure to pay employees on time resulting to loss of morale. And also it can lead to frauds and embezzlement. Another one.
Using the wrong rate to compute wages and salaries.
Yeah, that's also another risk, use of wrong rates when you're computing salaries and wages. Another one.
Use of corrupt data due to computer viruses resulting to wrong computation of payroll.
Yeah, you can use the wrong data, which virus can attack your machines, leading to wrong computations of the payroll. Another one.
The last one, paying leavers and status for days not worked.
Paying leavers and the status for days not worked. By the way, you need to be very careful when paying, when you have the lost days for the leavers and for the status. Many people they end up paying more or less of the amount if you don't compute that amount very, very well. You need to be very careful when it comes to such. So I know we have Virginia in the class. So Virginia, I want you to take us through the general controls in relation to salaries and wages, general controls.
Hey, my name is someone to help me. I'm in a transition right now.
Okay, thank you for that. Lydia cannot talk right now. Irene, anyone else? I think nimeona Irene, nimeona Virginia. I think kuna mtu mwenye sijasema na kwa hii class. Pesh. Pesh hata tulisikia mtoto akituongelesha. So Pesh, take us through the general controls in relation to salaries, hata kama ni mingi namna gani.
There should be personnel. There should be a personnel file maintained for each employee, showing the name of the employee, date of appointment, authorized deductions, job group, basic salary, etc.
Asante sana. Thank you. Number 2.
There should be proper procedure in recruitment, promotion, dismissal of staff, and these procedures should be consistently followed.
Number next.
Time record should be maintained for each employee who is paid on time basis. That is how he has worked through a login system.
Yeah, another one.
And then the payroll should be prepared by an independent person who is not involved in the recruitment of employees, payment of wages, etc. A deduction of payroll preparation should be segregated.
It is duties.
Payroll should be, duties of payroll. The duties of payroll preparation should be segregated. Number 6, payroll should be checked for arithmetic accuracy before payment by an independent person. Number 7, payroll deduction should be proper, computed and deducted.
Properly computed and deducted.
Access to payroll should be restricted only to authorized persons. Payroll should regularly be reconciled with personnel records in order to detect ghost workers. Payroll should be authorized and approved by a responsible person before payment. Payroll for different periods should be compared on a regular basis, and any variance should be investigated. Names of dead and retired employees should be removed from payroll. Employees who receive their wages in cash should be identified and should sign while collecting their wages. Any unclaimed wages should be recorded in the unclaimed wages register. Then there should be a specific day for payment of wages, and employees should be notified in advance. And lastly, unclaimed wages should be banked and should be kept in safe custody before banking.
Very true. Thank you for that. Pesh, I know zilikuwa mingi zenye nilipeana, but I know these are things you guys, you know, or if you have ever dealt with a payroll. If you have not dealt with a payroll, those are the things you will, if that time comes, or those are the things which are dealt with by the people dealing with the payroll. Because you find payroll, if you have like, you're paying like 500 employees, for example, it's a lot of money. If some of the employees they are paid maybe around over 100,000. So you find it is millions of money. That's why you need the payroll accuracy is very key. You send it to your supervisor for approval, and before sending it, you need to have been reviewed by one of your colleagues. If you are two, one prepares, the other one reviews the payroll, then you send for approval maybe to your supervisor, who is also going through it before approving. Then again, it is taken back to you. You continue with the payment. So it is approved before payment. So I know those are things we are familiar with. These risks, the common errors and frauds associated with wages and salaries, tutapata ni kama tu zile risks, most of them, but we can just go through them, the common errors and frauds which are associated with wages and salaries. And this one, Irene is going to take us through them.
Payment to dummy workers, using wrong rates to compute wages and salaries, double payment to employees, paying leaves and status for days not worked, overstatement of hours worked by employees, payment of unauthorized overtime, payment of unauthorized bonuses.
Yeah, so those are some of the common errors we can find and frauds can find relating to salaries and wages. So that's about salaries and wages. We have now controls over banking. Controls over banking. I'll take you through the objectives as to why we should have controls regarding or relating to banking. One is to ensure safety of unbanked checks. That's what we say, unbanked checks, they are kept in a safe. Another one is to provide evidence over dishonored checks, ama zile zimebounce. To detect teaming and lending with respect to debtors. Yeah, that is also another reason why we should have controls relating to banking. Pesa ikipokelewa tunasema isikae na mtu ikuwe banked, so that somebody cannot be tempted to use the money. To ensure that withdrawals are properly authorized. Yeah, there is no withdrawal without proper authorization. Also to ensure safety of cash in transit to the bank. Kama ni G4S, uchukue pesa if it's in a supermarket, to check there, so that we ensure the safety of the cash in transit to the bank. So we have the specific control procedures. I'll also take you through those ones. One is that cash required should be promptly, should be cash received, should be promptly banked, not required. Cash received should be promptly banked. Once you receive money, let's not stay with the amount or with the cash. Then adequate security arrangement should be made during the banking. When you're banking money, security arrangement is very important. Duties of cashier and bookkeepers should be segregated and regularly rotated. Let you not be the cashier and also at the same time the bookkeeper. That is what we mean. The banking statement or the bank statement should be obtained on a regular basis or on monthly basis. I know mostly it's on monthly basis. Again, all withdrawals should be authorized and approved. All dishonored checks should be accounted for and confirmed for validity. Then bank reconciliation should be done at least once on a month or in a month, once or at least on monthly basis. We have controls over check payments, here too. That's one I give. Oh, this is Lydia. Take us through the controls over check payments. You start with the objectives. Okay.
One objective is to ensure that payments are authorized. To ensure safety of checkbooks. To ensure duties of writing checks, signing, and issuing are segregated. And to ensure that dishonored checks are accounted for.
Yeah, then specific procedures, go through them also.
Then the specific procedures, one is unused checkbook should be kept in a lockable drawer. At least 2 signatories should sign the checks. Signing blank check should be discouraged. There should be a check register indicating all checks paid, the check number, the name of the payee, the amount paid, and the date. Is it the date of payment or it's date of collection?
Of the check. The checks are always dated in ERC because of when they are clearing.
All support documents should be stamped as paid to avoid double payment.
Yeah.
And the last one, regular bank reconciliation should be undertaken and the dishonored checks are verified.
So thank you, Lydia. The next one here is Pesh. Take us through controls of bank reconciliations.
Bank reconciliation statements should be prepared at least once in a month.
Answer for objectives. Objectives, eh?
Controls, okay, so objectives. To ensure safety of unbanked cash. To check the accuracy of receipts and payments made through the bank. To agree the client record with the bank details.
Yeah.
To agree the client record with.
Wakati tuna reconcile, we reconcile our books, the cash book and the statement, bank statement. So we are confirming that what is in the cash book, it is exactly what went through the bank detail statement.
So it's client records matched with the bank details.
Yes.
Okay. To test for effectiveness of internal controls over the cash and bank. To detect frauds such as window dressing, that is management fraud. To investigate items causing variance between bank balances and cash book balance. Then to check the accuracy of records in the cash book by performing cut-off procedures.
Yeah, thank you. So that before we proceed, acha nielezee kitu pale regarding the window dressing. Then you utaendelea tu. So there is this concept of window dressing you've seen there. So window dressing is a fraud caused and this is perpetrated or it is a fraud committed by the management. That's why not a little management fraud. So it is sometimes when a company is doing very poorly financially and they do not want this picture to get into the mind of the auditor, the company can borrow money from an external source. They deposit the amount of money in the account of the company so that when the auditor will ask for the bank statement, then the bank statement will be okay. You will see that the company has got enough money maybe to sustain itself and the operations. But this is just money which has been borrowed maybe and deposited in the account before the audit. Then after auditor has done the audit, then the owners or the management, they withdraw the whole amount of money and take back to where they had borrowed that money from. So they are dressing the windows with the curtains so that you cannot understand whether the company is suffering financially. So that is what we call window dressing. When you are suffering and you have nice curtains, no one can know how you are suffering while the person is outside, unless it's somebody in management, unless it's somebody who is inside the house. So you dress the windows very well. Even if you are struggling, no one can know. It is only you who knows. So that is what we call the window dressing. Sometimes it can be called window dressing and knitting. Well, window dressing and knitting. Okay, then you can proceed now with the specific controls regarding to that. Continue with specific controls.
Specific controls of a bank reconciliation. Bank reconciliation statements should be prepared at least once in a month. Bank statements should be obtained at the commencing of exercise.
Yeah.
Bank reconciliation should be performed by an independent officer of the company who is not involved in the maintenance of the cash book. Then the reconciliation process should involve checking cash receipts and payments with the details in the bank statements. And then the reconciliation statement should be signed and dated by the person who performed the task.
Thank you so much. Kama mshaifanya bank rec, you understand all what that means. Then tuko na controls with regard to petty cash. Controls over petty cash. Controls over petty cash. Who is going to take us through those specific controls over petty cash? I think Sahi Nipesha ameongea. The next one should be Lydia.
Controls over petty cash. Number one, the level and the location of petty cash flow should be laid down properly, formally.
Thank you.
There should be a restricted access to the petty cash float. Should be held in a cupboard drawer with restricted access to the key. For all expenditures out of the petty cash require a voucher signed by a responsible officer other than the petty cash cashier. The impressed system.
Wrong. To be the impressed system.
The impressed.
The impressed system.
Impressed. The impressed system should be used to reimburse petty cash float so that at any given time, the total cash and value of the vouchers not reimbursed equals to the set amount. Then voucher should be, number 6, voucher should be procedures before checks.
Vouchers should be, just go to number 7.
Vouchers should be cancelled once reimbursement has taken place or signed as paid. There should be a minimum.
Number 6, should be vouchers should be produced before checks are signed for reimbursement. Vouchers should be produced. That's number 6. Before checks are signed for reimbursement. So continue.
There should be a maximum amount of petty cash payment to discourage normal purchase procedures from being bypassed. And number 9, there should be independent reconciliation of the cash periodically. And the last one, rule should exist preventing recashing of checks.
Okay. I know petty cash munadili nayo sana, those ones you know. Controls over inventory. Irene, take us through controls over inventory.
To ensure safety of inventories, to ensure that stock movement is authorized and recorded, to ensure that stock records include only items that exist, to ensure stock records captures items that do not belong to the client.
Yeah, it should to ensure stock records captures items, also items that do not belong to the client. You know, sometimes you can be holding some items on behalf of somebody. It should be also noted. Continue.
So it should be?
Not any stock you are holding, you know, imetumika, maybe even a security, it is there, it should be noted and it is part of your stockers at that time until maybe the client or the customers honored a particular maybe policy.
Okay, to ensure that adequate provision is made for slow-moving inventory, damaged stock, and obsolete inventory. And then we go to specific controls, procedures over inventory, approval and documentation. Issue of stock should be made only on properly authorized requisition. Review of damaged, obsolete, and slow-moving inventory should be carried out periodically. Any write-off inventory should be properly authorized by responsible officer of the company. All receipts and issue of stocks should be recorded in a store's ledger card. Perpetual inventory system should be used to record inventory. Minimum and maximum stock level should be set to avoid overstocking or understocking.
Continue to arithmetic accuracy.
Arithmetic accuracy. All receipts and issues should be recorded on store's card and cross-reference to the appropriate good received note. Costing department should allocate direct and overhead cost to the value of work in progress according to the stage, degree in completion, risk. There should be periodic check of actual units and work in progress. There should be an independent person in charge of counting and checking the accuracy of inventories. Then we go to access to stock and records. Separate centers should be identified at which goods are held. Deliveries of goods from suppliers should pass through good inward centers to the store. All goods received should be recorded and only authorized personnel should access the store. There should be security personnel in the store. And controls during stock check. Stores should be closed during stock check. Stock check should be done by independent person who were not involved in running the store. Counting of stock should be done in the presence of the storekeeper in order to assist identifying the stock. Duties of counting and recording the stock should be segregated. Procedure should be laid down to enable stock check, slow-moving inventory, damaged and obsolete stock. Procedures should be laid down to ensure that stock in the stock record hands of a third party is identified and included in the stock record.
Thank you so much. I know inventory inakuanga na mambo mingi. Umesoma a lot. Thank you for that. We go to the controls over non-current assets. Hiyo ndio inakuanga ya mwisho on the specific controls. Ndio tuende kwa the last letter. No, the second letter, sorry, controls over non-current assets. In ya nane, this who was not this is should be who? Irene ameongea Pesh ni amesoma kweli. Next should be Pesh ama ni nani? Lydia hapatikani. No, Lydia I think. Virginia ndiye hapatikani leo. So
I'm back.
Oh, Virginia, you are back.
Yes.
Tusomee controls over non-current assets starting with the objectives.
Control over non-assets objectives. A, to ensure that non-current assets are acquired through proper authorization. To ensure that non-current assets are safeguarded against theft, misuse, and negligence. To ensure that disposal of non-current assets in authorization and made at a reasonable value. To ensure that non-current assets are well depreciated, that is /appreciated. To ensure that loss/profit on disposal is properly accounted for.
Thank you. Continue to specific control procedures. Number 1.
Annual capital expenditure budget should be prepared and submitted to the board for approval. A register of non-current assets should be maintained. Non-current assets should be properly insured. Non-current assets should be kept in a safe custody to prevent misuse and damage. All acquisition of non-current assets should be authorized and approved. Disposal of non-current assets should be authorized and approved. Non-current assets should be properly depreciated and rated of depreciation should be previewed on regular basis. Important documents supporting purchase of non-current assets should be kept in a secure place.
Thank you so much for that, Virginia. So we have gone through the common items which we interact with and which requires many controls in most of the organizations. And if it's an exam, it will always come within whatever we have talked about. You've seen most of those controls. It just there's a lot of repetition regarding authorization and approval, proper recording of any, if it's purchased, it needs to be recorded. If it's non-current assets, recorded in the assets register. So if it's inventory, we keep the proper ledger accounts. So recording is like, it's like cutting across. Approval is like cutting across in all of those items you've talked about. So you don't need to struggle a lot cramming the specific procedures. Only what you need is knowledge, and you only be relevant. So is the audit after you have gone through the company's system of internal control, even gone to check the specific controls. Then you need now to, if you have come across maybe some areas, there's no segregation, there's no approval, you need to do or to notify the management through a letter called the management letter. Any weakness you find in the accounting and the internal control system, you need to let the management of the company aware of it through a letter called management letter, which should show the weaknesses, the risks associated with the weaknesses, and how you give a recommendation on how to overcome the weaknesses. So that is the next concept, management letter. Lydia, tusomee the bit of management letter paragraph ya kwanza. Hizi hiyo statement.
Management letter is a letter written by the auditor to the client management.
Ile kubreak, una break.
Highlighting the routine and the internal control system that the auditor came across in the course. What? Unanisikia?
Sasa uko sawa, endelea.
Is a letter written by the auditor to the client management highlighting the weakness of the accounting and internal control system that the auditor came across in the course of audit. There is associated with such weakness and recommendation on how to overcome such.
Thank you. So it is the risk associated with such weaknesses and recommendations on how to overcome the weaknesses or such weaknesses. So that is what we call the management letter. The first letter tulisema inaitwa engagement letter. Sasa tuko kwa the second letter, which is now management letter. Now we want to see the objectives of this letter. Remember, we are not far from finishing up on this topic. I said today is the last day we can finish up on the topic. So objectives of management letter. Number one, tusomewe na Penina.
It enables the auditor to bring to the attention of the management the weaknesses in the accounting and internal control system.
Thank you. So that is just another tutuende pole pole. This letter, it will bring to the attention of management the weaknesses. That is one of the objectives. We want the management to be aware of the weaknesses in the accounting system and in the internal control system. That is one of the objectives why the letter should be written. Number two, tusomewe na Irene. Or number B.
Enables the auditor to identify those areas in the internal control system and accounting system where there are no controls at all.
Yeah, you know, as the auditor, maybe umepitia through salaries and wages, ama umeenda through maybe reconciliation, umepata, there are some areas without controls at all. So as the auditor, you will identify and bring to the attention of the management such areas where there are no controls at all. So auditor will identify such areas where there are no controls at all and bring to the attention of management through this letter called management letter. Number three, tusomewe na nani? Virginia. Number C.
This letter brings to the attention of management the risk associated with the identified weaknesses.
Yeah. As the auditors, we must bring to light of the management the risks which are there and which are associated with the weaknesses which we have identified in the company system. Another one, tusomewe na nani? Lydia.
Lydia.
Hey, Lydia, what is happening?
Effects of the identified weaknesses on the true and fairness. Hey, he is and every correct you. Good.
Irene,
Okay.
Lydia
It enables the auditor to advise management on the effects of
identified
weaknesses on the true and fairness statements. Eh?
Lydia, thank you. At least hapa tumekusikia. Amesema it enables the auditor to advise or enables the auditor to advise management on the effects of the weaknesses on the true and fairness of the financial statements. So when auditor comes across the weaknesses, he must ascertain how they are affecting the company's financial statement. So he will advise and also the company management how the weaknesses affect the truth of the financial statements. Now, Irene, tusomee number E.
Through this letter, the auditor can inform the management the effects of identified weaknesses on future audits if not corrected.
Yeah, we can tell them what are some of the risks associated with this weaknesses on the future audit if there is no correction of such weaknesses. Virginia, tusomee number F, which is the last one.
It enables the auditor to give his recommendation to the management on how to overcome the identified control weaknesses.
Yeah, in the letter, tutapeana recommendations as auditors to this management on how they can overcome the weaknesses also in the future. Good. So we have now the timing of the letter. I know there's some correction here in the timing of the letter. This letter is sent twice, one after the interim audit and the one after the final audit. So please be very careful there because you are in class today. This letter should be sent to management, preferably in two phases. That is after the interim, not internal. It is after the interim audit and then after the final audit. So the letter which is sent after the interim audit, inaitwa nini? The letter of weaknesses. When you read, then the first bulletin there, the management letter sent after the interim audit, not internal, should be interim audit, usually contains weaknesses in the accounting and internal control system of the company, which the auditor came across in the course of the audit. This letter is commonly referred to as a letter of weaknesses, since it contains the weaknesses that the auditor discovered through compliance testing of controls. Then the management letter sent after final audits basically deals with non-compliance with the Companies Act, generally acceptable accounting principles, companies, policies and procedures, etc. This letter is commonly referred to as a report to management. It basically contains weaknesses that were discovered through substantive testing of transactions and account balances. So that is about the timing of the letter. Inatumwa mara mbili, after the interim and after the final. Yenye inatumwa after the interim inaitwa the letter of weaknesses because it contains the weaknesses discovered through maybe compliance testing. Yenye inatumwa after the final audit, it is called a report to management. It contains weaknesses relating to non-compliance with either the gaps, the Companies Act, company policies, etc. etc. So any non-compliance, it is found in the report to management. Now we have contents of this letter. Kama unajua the objectives, content zinakuwa rahisi sana kabisa. So kila mtu atakuwa anasoma moja moja as we continue. Hapana mbili mbili, kila mtu mbili mbili, starting with mwenye network yake inapotea ni Lydia. Lydia, your internet iko na shida, wacha tusomee the first two contents, then nao wengine wafuatie. First two. Kwani hata umepotea? Okay. Hey. Are you stammering? Lydia, please, Abu soma tena. Contents of management letter, Lydia, number 1.
Okay, first content is weaknesses in the accounting and internal control system.
Number 2.
Weaknesses in the accounting and internal control.
Number 2, Lydia.
Deficiencies in the accounting and internal control systems.
Thank you so much, Lydia. Irene, tusomee number 3.
Deficiencies in the accounting and internal control systems.
Thank you, Lydia. Tusomee number 3 by Irene.
Risks associated with identified weaknesses. Number 4, effects of the weaknesses on the truth and fairness of the financial statements.
Thank you so much. Virginia, tusomee 5 and 6.
Effect of the weakness on the future audit if not corrected. Number 6, auditor recommendation on how to overcome the control weaknesses.
Page, tusomee 7 and 8.
Non-compliance with the requirements of the Companies Act and non-compliance with the general acceptable accounting principles.
Wacha nisome 9 and 10. 9 is non-compliance with the company's policies and procedures. Then the last one is consequences of not following the auditor's recommendations. The last concept is management letter and third party, or management letter to third party. And the truth is that it says the general rule is that the management letter is a confidential communication between who and who, between auditor and management. Meaning we should not disclose content of the letter to any party's auditors, and also management should also not disclose the content of the letter to any party without the consent of the auditor. So if it's the management, they should not disclose the content of the letter to any party without consent of the auditor. And also auditors should not disclose the content of the letter without the consent of the company management. So that is what you'll find there. We should keep confidentiality of the information because it's about the company weaknesses. We keep confidentiality of that information. So let me read. Management should not make the contents of this letter accessible to any third party without prior written consent of auditor. And also auditor should not make the content of this letter accessible to any third party without prior written consent of management. Auditor has a professional duty to maintain confidentiality of this letter. That brings us to the end of this one of the widest topic in auditing. Ikishanga najuanga audit imeisha, and I say that without fear. Ni kama audit imeisha. On Wednesday, I need to be doing a different topic which I need to finish, audit overall review. Mulisema tu kufanya. But in Kituma, hapana, I think that one we did. Audit overall review, did you do?
Hapana, ulituma notes.
Na nikatuma video. Is it not true?
Na hujatutumia notes za subsequent events.
Iko hapo wewe.
Notes, mi sina.
Siko kwa hiyo handout review. Those are the subsequent events.
Oh.
And kwani video ndio hiyo. Video
Video niliona.
Going concern and subsequent events. Chini yake tarehe 10 Julai nikatuma overall review notes. Sisi ko pale ama ni mimi naona niko kwa group, niko kwa hiyo group as I'm talking, by the way I'm checking on how I shared. Nikatuma
video. Videos niliona.
Haya, notes umeona? 5 pages.
Hiyo ya subsequent ndio sikuwa nimejua ndio hiyo ya nini.
Kumaanisha huku ifungua.
Niko nayo, nimeprint leo.
Oh, umeprint leo? Yeah, because I want to do audit evidence next class. After audit evidence, nimebakisha reporting na maybe ndogo public sector na imeisha syllabus. So for today, it's almost 8, and though it will answer late by around 20 minutes, but we have tried to go beyond so that we finish up the topic. Thank you guys for your cooperation. Nani kama nyinyi. It is my pleasure having you here today up to this time, being this cooperative. And now I'm seeing my class is a class of ladies. I don't know where men are. Men, I think they don't do CPA currently. I think men are doing engineering courses and other serious and more serious courses, or they are busy doing or looking for money to pay for your school fees or for your tuition fee and exam fees. So I don't blame men. So enjoy your night. Let's meet on Wednesday for audit evidence class. And I think I can, I'll work on sharing tomorrow and handouts on audit evidence so that we also go fast. We don't waste the time there. So that by end of this, kwani this month imeisha? By the way, when is the end of this month? Na nilikuwa nasema namaliza syllabus by end of this month. End of the month ni lini? Ni this week ama next week?
Next week, Wednesday.
Next week Wednesday. Namaliza syllabus next week Wednesday. That one, be assured. And I've said namaliza next week Wednesday that it's audit evidence. It's not that very wide. I'll share what is there in audit evidence and you start reading. Kama nimemaliza controlling syllabus imeisha. Then reporting, I'll share even the video. Have a good night. Somebody is chatting here. Nani anachati hivi ni muone. Wacha nisome chats. Subsequent demand is kaput next week. The subsequent ndo gani hizo? Okay. Sawa. Enjoy your night. Let's meet next class. Unless there's somebody with a burning question.